This is already the third video in this portfolio breakdown series, and this time I have some new things to share. Since my last update, which is about a month ago, a few things have changed in my portfolio, and I would love to share these things with you. And I'm very excited to see what you guys think about this video, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Before diving into the portfolio breakdown, I just want to give you all a quick heads up on which stocks I bought recently. Usually I buy at the end of the month after payday, but sometimes when I find myself a great deal I make the purchase regardless. My most recent buys are VG and the S&P 500. And for those who don't know, the S&P 500 is the backbone of my portfolio. I try to buy more almost every month. And the main reason is the steady return it gives me over a longer period of time. Next to that, I doubled my position on VG. It was just a small one with only 10 shares, and I added 12 new shares to a total of 22 shares. The main reason is that VG was at almost $28, which to me feels like a great deal, and the stock has been moving upwards since I bought. Next to that, I think VG is a great dividend paying stock with plenty of room to grow in the future. For the upcoming buys, there are multiple candidates. I think Starbucks is on the list now for quite some time, and the main reason is the current price. Last month I almost pulled the trigger, but I'm glad I didn't. I decided to wait a little longer, and the stock price came down a bit, which is very nice. Other companies that I'm looking into are American Express, T. Rowe Price and United Health. And these are very different companies. To me, all these companies are looking undervalued and pay a solid dividend, or have a proven dividend growth track record. And American Express is expected to release earnings this week, which could be very interesting. So it also depends on what will happen there. Analysts have mixed feelings for now. Which stocks are you buying at the moment and why? Let me know in the comments down below. Before we dive into every singular position, I want to quickly show you my sector breakdown. There are many ways to classify the different stocks. This is the most convenient to me. And after recently buying the S&P 500, it is again the biggest sector in my portfolio. And I'm planning to increase my position to 30% before the end of 2025. I could easily make it 30% in the upcoming months, but I also want to keep on buying other stocks instead of only the S&P 500. And please note that these are European classification numbers, so that's why we are seeing a comma instead of a dot. Second biggest is service with 22.7%. If I decide to add more Starbucks shares in this portfolio, then service will be again the biggest. REITs are also a big portion of my portfolio with 22%. And the main reason why it is that big is because of the dividends. Finance represents 17.6%, also with the recent buy of ARCC almost 2 months ago. Health is at 8% and tech is the smallest sector with only 7%. Looking at the individual positions, a few things have changed. The S&P 500 is still by far the biggest with 22%, and this is really leaving everyone behind. As mentioned a second ago, I'm trying to get this to 30% at least. In my last update, Starbucks was the biggest singular position, and Visa was the second biggest. And as we see here, they switched positions again, and the main reason is that Starbucks has dropped in share price again. United Healthcare presents 8%, also being one of the biggest positions in my portfolio. And from there we see a few stocks around 7%, with Microsoft, Realty Income and Texas Roadhouse. After that we have a few stocks representing 5 to 6% each, with T. Rowe Price, ADC, ABR, ARCC and EXR. As mentioned earlier in this video, T. Rowe is on the potential buy list for this month. This could drastically increase the position. ABR has come down a lot in stock price in the past few days, mainly because of the news that came out. My smallest positions are Main Street, Stagger Industrial and VG. My total annual dividend income is $773, resulting in a 3.33% dividend yield. This is a $24 increase versus last month, where my annual dividend income was $749. And this may seem like a small increase, but adding every month around $20 to $30 to my annual dividend income will, in the end of the year, result in an increase of $240 to $360, which is of course a lot of money that can be reinvested each year. On a monthly average, this results in $64 each month, but of course not every month is the same. In some months I get paid $100 and in others only $20. For the month of July I received $35, which is very nice. It is expected that for the month of August I receive $60. In this graph we see that ABR pays by far the most dividends and represents a big portion of my total dividends. Realty income is second, and from there Starbucks, T. Rowe Price and ADC also contribute a decent amount. Because I bought some more S&P 500 shares, this is also becoming a top dividend payer. Microsoft and Visa, relatively large positions in the portfolio, only contribute a small amount of dividends due to the lower dividend yield. What's also interesting is that ARCC only represents a small portion in my portfolio, but already adds quite a lot of dividend on the total sum. And as said a second ago, ABR adds the most dividends in my portfolio. In total, ABR represents 21.4% of my total dividends, while only representing 4.6% of my portfolio in terms of value. This is because I consider ABR as a risky investment. That's why I want to limit my exposure to a maximum of 5%. Realty income, Starbucks, T. Rowe Price and ABR represent 50% of my total dividends. That's something that I want to change in the coming quarters. I think each single holding is a great investment, but I want to diversify a bit more here. That's why I'm trying in the coming months to expand other positions. Of course, depending on how the coming months will look like and how companies are performing or what the stock price does. The planning is to expand ARCC, T. Rowe, the S&P 500 ETF of course, Visa and VG. But again, this could change by things that are changing in the market. And of course, dividends are my main source of income in this particular portfolio. But I think it is very interesting to take a look at the total returns. Both Microsoft and Texas Roadhouse have really carried my portfolio in terms of stock price growth, both exceeding the 50% return. And I think I really need to carefully look at the current valuations to see if the current stock price is still justified or that I might to lock in some profits and trim down my positions here. Visa, the S&P 500 and Main Street also add a decent amount. And interestingly enough, Starbucks is where my biggest loss is, with minus 9%. So it might be a great moment to decrease my cost average this month. And now the final part of the video, where I cover the dividend scorecard of each of my holdings to show you what the individual stocks are yielding at and other interesting numbers. Starting with ADC. Dividend yield is at 4.7% and payout ratio is around the 75% average for REITs. There are some decent growth sets and ADC pays a monthly dividend, which is very nice. I did an analysis on ADC recently, so make sure to watch the video as well. Next up we have ABR, my biggest dividend payer. Dividend yield is at a whopping 13.3%, which is insane of course. Payout ratio is at 91% and not the 106% displayed here. And it has to be said, 91% is still a bit on the high side. They increased the dividend for 10 years in a row, which is also pretty impressive. The stock is coming down a lot in stock price lately, so it is interesting to watch and see what happens next. Next we have EXR, Another REIT paying a 4% dividend yield. Payout ratio is a little above the 75% average for REITs, but nothing that worries me a lot here. On top of that, they have some impressive growth numbers for a REIT. This stock increased a decent amount lately, and I'm not planning to buy more for now. Who knows in the future? Main Street is yet another monthly dividend paying stock. Dividend yield is at 5.7%, and it used to be around 7%, but the stock tanked a lot lately, hence why dividend yield is lower now. They also have decent growth stats for such a high yielder. Next stock is Microsoft. Together with Visa, this is my lowest dividend yielder at 0.66%. But with this one, it is all about the growth. Pretty impressive growth stats in my opinion. And the stock is tanking a decent amount again. I'm really looking forward to the next earnings report. Realty Income is yet another monthly dividend paying stock, with dividend yield at 5.6%. It's really looking good and they have an impressive growth track record with 26 years of dividend increases. I think Realty Income is also one of my favorite dividend paying stocks. The stock itself is also increasing a decent amount in ticker price again, which is interesting to keep your eye on in the coming months. Stack Industrial is my last monthly dividend paying stock. Dividend yield is at 3.94% and payout ratio is relatively low for a REIT. The 5-year growth rate is a little shy, but the 11 consecutive years of increases make up for that. Starbucks is one of my biggest dividend payers. Dividend yield is at 3%, which is a great number. Payout ratio is a bit on the high side here, but growth stats are looking really impressive to me. And as said multiple times now in this video, I'm planning to buy more shares of Starbucks. However, I still need to pull the trigger on when. T. Rowe Price is also a big dividend payer in my portfolio that yields at 4.2%. Payout ratio is also a bit on the higher side with this one, but those growth stats are really impressive. And it is the same story with Starbucks. This stock is on my buy list as well. Texas Roadhouse is next on the list. Dividend yield is at 1.44%, which is a decent number. But this one is again all about the growth. During the lockdown period they cut the dividend, hence why they only have 1 year of dividend increases. United Health yields at 1.64%, which is a decent number, similar to Texas Roadhouse. Payout ratio is really low and the growth stats are really impressive. With the stock going up and down a lot lately, it could be an interesting play. VG Properties is my last REIT and it yields at 5.64% and has a relatively low payout ratio for a REIT. Growth stats are also not too bad for a REIT and I recently doubled my position in Fiji. Visa is one of my favorite dividend growth stocks right now. It yields at 0.78%, but it is the same story as with Microsoft. It is all about the growth with this one, and I just love the company. Interesting thing is that American Express is planning to release earnings this week, which could impact Visa's stock price as well. ARCC is also the last stock in this list, yielding at 9%, which is the second highest dividend yield in my portfolio after ABR. Payout ratio is a bit on the higher side here, but that's very common for these type of companies. The growth stats also look pretty good to me. And this was my full portfolio breakdown. I'm planning to do this every month to give you a few insights in my portfolio and my choices. Next to this portfolio, I have another portfolio fully focusing on the S&P 500 ETF. Overall, I think I'm pretty happy with the way my portfolio looks right now. My goal is to increase other positions than ABR so that I'm not relying too much on their dividend. Currently 21% of the dividends are coming from ABR, while only being 5% of my portfolio value. What are your thoughts on this dividend portfolio? Are there things you would do differently? Let me know in the comments down below. And I'm also really interested in your dividend portfolio. Which is your favorite dividend stock, or which is your biggest dividend payer? Share it. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.